Woolworths is a combination of a food and clothing retailer. It pioneered organic food retailing in South Africa and now has very significant clothing retail interests in Australia.
Indeed, that Australian business now larger, in fact, as a contributor to earnings than South Africa. And yes, this is the star performer of the space. Look at that market capitalization.
93.4 billion rand. Price to earnings ratio, expensive at over 26. Dividend yield here of 2.5. Is it sustainable, the performance that we've seen from Woolworths?
Well, I think it is, from a variety of perspectives. Okay, today we're concentrating on the clothing side, but if you look at the food side, this is becoming more and more the preserve of the emerging African middle class. And this is a segment that understands quality and understands the price-quality relationship. So I think what they've also done in recent years is they've reinvented themselves as far as clothing is concerned. You know, you go back a decade ago, and it was pretty frumpy type of clothing they sold both on the male and female side. That's changed dramatically. Financial services has come to the fore. And of course, as Paul said, they've gone into Australia in a big way over the past 20 years, and more recently with the revamp of David Jones. So, you know, I think with over 45% of their earnings coming out of Australia, albeit in a weak currency, a weak commodity currency, it's still stronger than the rand. And I think, you know, some people also forget that they're also into the rest of Africa in a fairly substantial way. Yes, they're no longer in Nigeria, we know that. But they're in other parts of the continent as well. So they've pretty much got all bases covered, is really what I'm saying.
Let's have a look at the share price graph. And Paul, you can give us a little on your thoughts around this upward trajectory.
So, you know, it is at almost 100 Rand. You can see it's done spectacularly well. You could have bought them in 2008, 2009 at about 14 Rand a share, and it's been a one-way trip upwards. There was a little bit of a hiccup when the deal was announced to go into Australia. Some people thinking that it maybe was a bit reckless.
You mean the David Jones acquisition?
Yeah, because it was quite expensive, and people thought, well, if David Jones was so good, why is it doing so badly? And isn't that sort of department store model getting a bit tired? But what Ian Moyer and his management team have done is to introduce the W brands, which are the sort of Woolworths clothing brands there. They've looked at the asset utilization, they've changed the store space, they've downgraded some of the space that they allocate to international brands there, and they appear to be doing very well. They've got some wonderful properties there. So, yes, its focus has shifted. 2 or 3 years ago, I was always singing and carrying on about the food and saying, well, what is this clothing stuff? But I must say, I'm a convert. I can see how well clever buying in clothing is a very good industry to be in.
If you're looking for exposure to clothing retailers, is Woolworths a must in your portfolio?
Absolutely. You've got to have this one. As I say, they've got it right. It started off a few years ago when Simon Sisman was running the show, and it's just gone from strength to strength with Ian Moyer, who's got a really good eye for what sells and what doesn't sell. And of course, a great experience in Australia prior to taking over the reins here. So yeah, clothing has really come right with a vengeance in Woolies.
Also, the in-store experience has been very good. They've rebranded many stores, they've tidied them up, spruced them up, they've been careful with location shifts, and then they've done a lot of advertising around, you know, like this Pharrell Williams visit, and then young,
so
attractive
going for a more youth-oriented market.
And it's very colourful and appealing, the stores, the lighting is very good, and then you mix that with the food aspirational side of things. I think Woolies stores are a great destination.
What's the catch? What's the downside here? Is there any downside?
I suppose the only downside, perhaps, is the fact that it's relatively expensive, but that applies to pretty much all of these stocks, Bronwyn. So I think
26 PE makes it expensive, relatively
it's kind of rich.
speaking.
No, there's no doubt about it. But as I say, I think they cover all bases better than any other retailer out there. I mean, they've got that beautiful food base, which is non-discretionary. And, you know, that's one of the few food retailers that goes in for genuine promotions on a regular basis. So, no, look, I think it's a very, very clever operation. So, yes, it's vulnerable in that sense, but I don't think too vulnerable.
Hot or not?
I'm happy to call it hot. It's one of our core holdings, one of our largest positions, and that's across the board in my investment activities.
Hot or not?
Red hot.
Red hot.